What's up, everybody? This is Danny Trades here to break down ticker symbol GOLD. We are on the 1 hour chart. We are fairly zoomed out right now. As always, this is not financial advice. This is just my thoughts on what this stock is likely going to do. On this zoomed out chart pattern, we can see that in November of 2022, we made our lowest low in recent history. Came up to make higher highs, higher low. Barely, is that a higher high? Barely a higher high. And now we just made or we can count that as a higher high. And we just barely made a higher low here. Now, as always, I'm working with a 200 period moving average and a 40 period exponential moving average. And this thing is flying this morning. So let's take a look at my drawings and my thoughts. Basically going from top to bottom, we have this March supply and demand zone that it shot right up out of. We have a weaker supply and demand zone, which I originally drew as this because of this consolidation zone right here. It came back to retest, continued on its trend. And then after what it did in the past 2 days, I went ahead and extended it down to here because of this big fat red candle. And going up, we have a support and resistance zone. As always, supply and demand zones are drawn in blue. Support and resistance zones are drawn in gray. So this is where we are looking at. We have another supply and demand zone that gold was getting rejected off of way up here. And let's go ahead and zoom in. Basically, this morning, I took a position on gold. It looks something like this. Put my stop right below that demand zone. And basically, I'm looking for a push past this 200 period moving average, perhaps all the way up to here. That is a healthy risk reward ratio of 2.5. I am averaging into that position. I am not full size into that position right now, and just because I take that position doesn't mean that you should. I'm just making this video so that if you are thinking about buying gold, or you just bought gold and now you're freaking out because you don't know what it's going to do, just a little comfort of my thoughts. So also strengthening our case for taking this long, if we zoom in on the 5-minute chart here, we have a nice little head and shoulders formed. So this is our left shoulder. Our head's right here. We can count this, depending how you draw this. It's going to look something like that, or it can even be something like this. That's how I would draw it anyways. But nice little bottoming structure, and the fact that it broke, let's make this right. I'll make this neckline should be here. Anyways, I count this as the neckline right here, the top of this supply and demand zone. I'm still not totally familiar with this tool. However, it just draws it out nicely. You can see shoulder here, head here, and shoulder here, right at the break of the shoulder and the supply and demand zone, shoots up out of there. That is what we call confluence, ladies and gentlemen. So, two theories. First one is that it is going to bounce back down off of this support and resistance zone, retest the supply and demand zone. At that point, I will likely add more, and then it'll shoot up here, probably get some consolidation or a little bit of a rejection off the 200 period moving average. Worst thing comes to worst. So it also, by the way, if you haven't got into this yet, it is not too late because you will have time to make a good pullback entry. Worst case scenario, it gets rejected by the 200 period moving average and it continues on down through the supply and demand zone and will likely find its bottom at this supply and demand zone. Best case scenario, it just shoots up right through here, doesn't even take a breath at that 200 moving average, and that's where my target's going to be, this little support and resistance zone. I'll probably take some profits there, and if it looks like it's still got some good momentum, I might hold it back up to here. But that is what I'm doing. Again, you do not have to do that. Just a good little few points strengthening the case to take this long for a short-term swing trade. If you were a day trader today and you caught this before it took off, that's really awesome. You made 2.73%, not bad for a day trade. However, gold is just kind of low volume and doesn't really move, doesn't have a lot of momentum or volatility normally, so not really the best stock to day trade. But if you're a short-term swing trader like me, it is slow and consistent, and that is what I like to see. So if you caught it at this supply and demand zone, you take it back up to here, that's 8.3%. If you take it back up to here, that is a good, healthy 18%. I have again, I'm shooting for here. But that is my thoughts. Still time to get into this if you want to take it long, and time to take it short if you absolutely think it's just going to continue to sell off. But anyways, that is my thoughts on gold. Thank you very much, and if you got anything out of this, please leave a comment down below, and even subscribe if you like. If there is also a stock that you would like to get my thoughts on, please comment down below, and I will make a video and break it down pretty much immediately because I got nothing else to do today. Anyways, if you are watching, thank you very much, and God bless.